Hey folks, it's Vic Noble here with a weekly trade example for you for the week ending April the 1st, April Fool's Day, 2011. And it was a kind of a fooling day today here in the markets. We had NFP today and yeah, kind of wild, heading straight down and heading straight up or vice versa depending on the pair. I just want to show you something here today that I've talked to you before about. I have a trade called a Vic trade that I came up with a long time ago. Geez, back in the early to mid 2000s, I guess 2004, 2005, and the thing just has worked ever since then, and ever since I discovered it, and it was new to me. But in any event, what it is basically a way to follow trend and in markets, and for day trading type of scenario. Actually, you can trade it longer term too, but just as a day trader, you want to get on the trend of the current day. And what it basically does is it follows a market flow and MACD, and we have specific ways to sell it. I won't get into all that here, but I mean, it's just that it gives you a quite an objective way to look at things. Now, notice I said quite objective. I didn't say totally objective. I don't believe trading's totally objective. I think that the best traders, if you start researching top traders in the world, all of them are discretionary. Every single one of them. You should always have discretion in your trade. You should understand what's going on and all that kind of thing. Today, this was a great trade to sell right in this the 96.70 area on the U.S. Canadian dollar as it was going down. You can see that it broke the prior day's lows in here, and we had a really nice one again yesterday on the U.S. Swissy doing the same thing. We've just had lots of them. You get them almost every day. There's a trade doing these kind of things. And there was actually a couple of losing trades today. Things whipped around on us on the euro US dollar and on the cable, the British pound US dollar. Some trades lose. Okay, I don't think I'm telling you anything new here. I mean, that's trading. But the key to it is to be able to manage losses so that they're very small and they don't hurt you, and allow your profits to be bigger. And in fact, on these trades, they're almost always 2 to 1, quite often 3 to 1. They can be 4 or even 5 to 1 in some of these. So, you know, if you lose on some trades, so what? If you have confidence in your trading method, losses should feel the very same as a win. Okay, how do you get confidence? By stepping up to the plate and doing it. It's the only way, and it will feel uncomfortable at first. But it's like anything else. The more familiar you become with it, the easier it's going to be to execute. And it's extremely important that you execute your trades flawlessly. Okay, focus on the trade setup and the process of it, not the money. The money should never, ever, ever be your focus. So here's some key points to take away today. Have a strategy that you understand. And you know what? That takes time. It's almost laughable that people put these things out there and say, hey, just trade this and you make all this money. Look, it takes time to learn anything, doesn't it? Okay. You got to be consistent in applying it. You have to learn to read the markets. In other words, what's the environment like? What's the stock market doing? What's the commodities doing? Why does all of this matter? What are the other currency pairs doing? What's the US dollar index doing? What time of the day is it? Does that matter? You have to learn all of this. You got to have the patience and the discipline to stand aside when there's nothing there or if things are unclear. And here's something important. You better understand how to manage risk. Now, I'll tell you something. If you don't get this part right, you might as well just stop trading right now. And that might sound kind of harsh, but that's the truth. Well, I don't want you to lose money. I hope you don't want to lose money. So learn about trade management, risk management in general. That's so that means your account risk and your trade management risk. Okay, learn how to get risk removed as soon as practical. When you're in a trade and it's moving in your favor, how and when should you get rid of risk? This is really critical to know this. It can make or break it can make the difference in your trading campaign. And the thing is, it isn't a one size fits all. Every situation, every trade's unique, every situation's unique, and you need to learn how to deal with each situation in real time. All right. So just a couple of tidbits of information and advice for you. I hope you find those helpful. They're so true. And if you ever have the compulsion to really get into it and learn it more, I would absolutely love to help you. We have a shameless plug here, sorry, but in the Coach's Corner service, or even some people even just prefer a private coaching session, but in the Coach's Corner service, that's just a super good learning environment. Boy, we have some people in there who have become such very good, successful traders, and they're great about helping other people too. So you can see what they've done, how they've taken all of these things I've just talked about, these concepts, and applied it to their own trading. That's made it unique to them, and they've come out big winners in it. So, check that out if you wish. But anyway, whatever you do is obviously your call. But I hope that what I've just said right here has been some help. Take it into consideration. It'll help. All right, it'll all help. Thanks so much, you guys. You guys have an awesome weekend, and I'll be back at the end of next week with another weekly trade example. Thanks.